We have the quorum and it's the appointed time. So first of all, this is a meeting of the Bills Committee on Inland Revenue Amendment Bill 2014 and election of chairman. According to Appendix 4 to the House Rules, the procedures for election of chairman is there, and then nomination by members, verbal nomination by one member and at least another member seconded from another member, and Mr. Kenneth Lang. Any seconder? Yes. Mr. Kenneth Lang, are you happy to take on that nomination? Yes. So any other nomination for the chairman? No. So I declare that Mr. Kenneth Lang elected the chairman of this Bills Committee. Good morning, members. Bills Committee on Inland Revenue Amendment Bill 2014, first meeting. May I now invite the administration team in, please. Any declaration of interest? Chan Kam Lam. Chairman, when actually, if we talk about declaration of interest, everyone has to declare. I benefit from the tax reduction. Mr. Sin Chung Kai, my mother is over 60 years old, so she will be able to enjoy that tax allowance. I declare my interest. I'm a tax consultant, and I'm employed in a company providing tax consultancy services. My declaration is the same as that of Mr. Sin Chung Kai. Yes, my father and my mother are all over 60 years old. Good morning. Good morning, colleagues from the IRD and FS2B. This is the first meeting of the Bills Committee on Inland Revenue Amendment Bill. Perhaps I'll like Charlie to take us through the bill. Thank you, Chairman. First of all, I would like to send an apology on behalf of Ms. Maple Chen. She is not well this morning, so I will be speaking on her behalf, and I hope to answer members' questions as much as possible. Now, about this bill, the objective is really to implement the concessionary revenue measures proposed in the budget. In drawing up the budget, the FS has extensively consulted a wide spectrum of the community and the business sector, and he has come up with a series of concessionary revenue measures, which are not only limited to on the revenue side. There are measures to maintain Hong Kong's competitiveness and to drive Hong Kong's industrial development. So these are all covered, and they work to benefit the Hong Kong's economic development and improve livelihood. So the bill is to implement the concessionary revenue measures, and that is to increase the dependent parent and grandparent allowance, and also the additional allowance related to living with these parents or grandparents. Also, on the elderly residential care expenses, the deduction ceiling has also been adjusted upwards. As for the salaries tax, tax under personal assessment and profits tax, there is also a one-off reduction for the year of assessment by 75%. And that would be subject to a ceiling of $10,000 per case. And that adjustment will be reflected in the tax payable. For the one-off reduction, 1.74 million taxpayers will benefit. And for the profits tax, it will benefit about 126,000 taxpaying companies and unincorporated businesses. As for the allowance for maintaining dependent parents, we estimate that around 550,000 taxpayers would benefit. The details of such proposals actually are outlined in the Legislative Council brief submitted to members in April. The bill applies to the 2014-15 year of assessment. Well, in terms of the allowance, so for such bills, we hope to work together with the members so that taxpayers can benefit as soon as possible. So much for my presentation. Thank you. Questions? Mr. Sin Chung Kai has raised his hand to ask a question. Any other members? 4 minutes. Sin Chung Kai. I want to ask some general questions. When the government makes choices on the increase in allowance, are there any particular principles to go by? This time around is the dependent parent or grandparent allowance. Sometimes it's the dependent children. So is it that the FS just threw a dice and then, came up with the area for increasing allowance? And you are not making any changes to the tax bands. And what is the logic behind your proposals? Yes, in drawing up the budget, well, he doesn't have a specific formula to go by, but he would definitely listen to views in the consulting exercise on the budget. He would take into account the economic conditions in Hong Kong, the government's financial situation, and also the inflation rate. Well, inflation rate is one of the factors, but not the only factor. So that's why there will not be adjustment to each and every allowance. Now, apart from views collected, we also factor in financial considerations, the impact on the tax base. For example, for personal allowance from 2013, in the year 2013, and actually all the allowances under the salary tax have been adjusted. But such measures will have impact on Hong Kong's tax base. If we are to increase allowances, some people will fall out of the tax net, and on a long-term basis, that will have an impact, overall impact, and reducing our tax revenue as a whole. So that's quite different from one-off reduction measures to ease burden of taxpayers. And the financial impact on the government on a long-term basis will be one of the factors considered. So why this year we are adjusting the dependent parent allowance? Why this particular item this year? Thank you. P.S. Among all the allowances, as I said, in the year 2012-13, adjustments have been made across all allowances. And the FS has noted that during the consultation period, there are views, particularly on the burden of taking care of the parents, grandparents, and so on. And we considered that in the last 3 budgets, an allowance, the children's allowance has been adjusted, and the allowance has gone up by 40% over the past 3 years. So that's why we didn't include it this time. Now, as for the dependent parent that allowance that has not been adjusted in the past couple of years, hence the adjustment this year. Any other questions from members? PS? Are you just say do work on this particular allowance this year and then another allowance next year? Is this the trend that, or is this a kind of way or approach that you are dealing with it? PS. Thank you, Chairman. Well, that might not necessarily be the case. That might not be our pattern. We would take into consideration the prevailing circumstances in coming up with adjustments to the allowances. Many groups have said that for SMEs, if their business turnover or their profits are below a certain amount, they would hope to have be charged a lower profit tax. Now, why is it that the government has not considered that suggestion? This suggestion was not raised only in this year, but in actually over the past 3 to 4 years. What many chambers of commerce and SMEs have raised this suggestion. Why is it that the SARG has not considered that? PS, please. Thank you, Chairman. We note the concerns, such concerns from the business sectors and the SME organizations. We consider that profit tax is a major source of income for Hong Kong. For any measure which will affect Hong Kong, the government's financial stability, we have to tread very carefully. Can we have a, say, 2-step profits tax regime? Well, that will have an impact on the stability of our tax revenue. And we also have to consider whether that approach is fair or not. Well, actually, there have been many opinions on where to draw the line. It's really open for discussion. And also, we would be creating certain uncertain scenarios where the companies may sort of split up their businesses just to enjoy the lower profit tax. If there is such an incentive, then we might have to come up with other countermeasures to tackle that. All along, we've been priding ourselves on our simple and low tax regime. So all these measures might have long-lasting impact on our tax system, and we have to tread carefully. Now, there are some 900,000 registered companies in Hong Kong, and only 90,000 of them are paying profits tax, so the tax base is rather narrow. Now, if we allow those earning a less profit to pay a lower profit tax, then that means that those who are earning a higher profit will have to pay more in their tax. So if the economy turns for the worse, then that will have a major impact on our stability or our tax revenue. Thank you. Yes, any questions from other members? If not, then I suggest that we go to the clause-by-clause examination of the bill. Well, my approach is that we would vet the Chinese and English versions together. So who would take us through the clause-by-clause examination?
Thank you, Chairman. Inland Revenue Amendment Bill 2014. The objective is to give effect to the proposals concerning tax concessions in the budget introduced by the government for the 2014 to 2015 financial year. Clause 1, short title. This ordinance is cited as the Inland Revenue Amendment Ordinance 2014. Clause 2, Inland Revenue Ordinance amended. The amendment is set out in sections 3 to 7. Please go on. Clause 3. In section 89, some transitional provisions will be added. Clause 4. In section 96, a one-off reduction of salaries tax, profits tax, and tax under personal assessment provisions will be added. Mr. Chiu, for 89, section 89. I have some technical questions. When section 89 is amended, so similar amendments are all added into section 89, right? Yes. Thank you. Please go on. Clause 5. Schedule 3C is amended. The elderly residential care expenses deduction will be amended from 76,000 for 2012-13 to 80,000 in 2014-15. Clause 6, Schedule 4 will be amended. Please pause, Mr. Cho. Regarding the elderly residential care expenses deduction, can you elaborate on the eligibility criteria? Yes, thank you, Chairman. Concerning elderly residential care expenses deduction, this is about parents and grandparents. If they reside in designated residential care homes, then the taxpayers can apply for elderly residential care expenses deduction. Then, if there are a few brothers and sisters, only one taxpayer can apply for that? Yes, that's true. So, among the brothers and sisters, they have to decide on who will make this application. Then this can be separated from the parents' allowance, right? Let's say son A will get this parents' allowance, and son B will take the elderly residential care expenses deduction. Chairman, in the bill, if there is this scenario, after applying for elderly residential care expenses deduction, there cannot be another taxpayer enjoying parents' allowance. So for one elderly, there can only be one deduction. So with elderly residential care expenses deduction, the parents' or grandparents' allowance will not be enjoyed. Yes, so only one out of the two. This is quite odd. This is 80,000. What about the parents' allowance? How big is the difference? What is the how much is the higher amount, the bigger amount? I'm referring to the case when the taxpayer is living with the parents. That is 80,000. So the same, right? Yes. The taxpayer has to live with the parent or grandparent for the whole year to get 80,000. But for this expenses deduction, there is not the requirement of living together with the parent. At the same time, this is a fully accountable deduction amount. Okay, can you please continue? Clause 6, Schedule 4. In Schedule 4, we have added in a schedule for 2014-15. So that's a table on allowances. basically, there is only change to the dependent parent and grandparents allowance. Clause 7, Schedule 31 is added. That is on transitional provisions relating to provisional salaries tax in respect of year of assessment 2014-15. Number 1 of the schedule is interpretation. Number 2, how the allowances would be calculated for the year 2014-15. 2.1 states that if the taxpayer has to pay provisional salaries tax for 2014-15, then for allowances for salaries tax, the new increased allowances for 2014-15 will apply. Okay, please continue. 2(2) states that if the taxpayer would like to apply for a suspension of paying salaries tax or holding over payment of provisional tax, then the net chargeable income for the previous year is calculated by means of referring to the new allowances. Mr. Chiu? Para 2, allowances granted for year of assessment 2014-15. The structure and the wording is the same as that for 2013-14, right? Yes, exactly the same. So every year you have to put this schedule in because you want to calculate the provisional tax with the new allowances. Yes, we have to be very accurate. We have to use the new allowances to work out the provisional tax payment for the subsequent year. Because the provisional tax for 2014-15 is based on income for 2012-13. So we have to state very clearly that we have to use tax allowances for 2014-15 in calculating the provisional tax for 2014-15. I have a question about policy. For provisional tax for 2014-15, when you calculate income, that is based on actual income of 2013-14 of the taxpayer, or are you going to seek more information from the taxpayer? For the income part, under the existing Inland Revenue Ordinance, there are some provisions on how to calculate provisional tax for 2014-15. Let's say in 14-15, the taxpayer has new employment relationship with income. Then, okay, for example, there are only 2 months in which he is not employed, and he is only employed for 10 months, so we have to calculate income for 10 months and do a projection. And if in the previous year he has only half a year's income, and for 2014-15 he enjoys income for the whole year, so this has to be appropriately adjusted. In the ordinance, the wording used for calculation of provisional tax for the coming year, the English words by reference are used. So in other words, we have to take reference from the previous year's income. Then the Inland Revenue Department will have some flexibility. We're able to more accurately calculate an amount which is acceptable to both the department and the taxpayer. About date of payment of provisional tax. Now, when tax demand notice is received, is it true that usually the first installment is 75%? Usually there are 2 installments, right? For salaries tax. Tax payment date, according to the law, strictly speaking, is only 1 day. But then if the taxpayer follows all the instructions, then the commissioner allows 2 installments. Usually the first payment will be scheduled for January, the second will be in April. For the first installment, that's the remainder of the outstanding tax from the previous year, and 75% of provisional tax. That's to be paid in January. And for April, we're talking about 1/4 of the provisional tax only. Many members of the public asked, why is it that some people are not required to pay tax in January and April. Some pay in December and May. So there are different dates. Even though the dates do not differ a lot, why are some taxpayers required to pay in January and April? Is there any logic in it? How do you define which taxpayers should pay the first installment in January? Chairman, the Inland Revenue Ordinance authorizes the Commissioner to determine the tax payment date, but then the Commissioner will take into consideration many factors. For example, if the tax payable is of a big amount, then the taxpayer will be asked to pay earlier. That's a practical concern. And there is a pattern. Usually, if you pay in January in the first year, then in the second year, you will also be required to pay in January. So the taxpayer will be able to make preparation. He will be psychologically prepared to pay in January. And in some cases, the taxpayer may leave Hong Kong, then we will make use of some special arrangement. Thank you. Please continue. Chairman, Schedule 31 to... number 3 of Schedule 31. Holding over payment of provisional salaries tax. Because there's an increase for the elderly care residential deduction. So in number 3, if the deduction exceeds 76,000, then the taxpayer can apply for holding over payment of provisional salaries tax, part of that provisional salaries tax. Mr. Chiu, I don't quite understand. Concerning this holding over, as long as the taxpayer states some justifications, then you will consider. Of course, he will have to produce evidence. But every year, the allowance may be increased, or the tax bands may be made wider. So why is it that you want to put in this provision in the schedule, telling people that they can use this ground to apply for holding over? Why is it that 3(2) is needed? Even without this provision, we do have the right. Okay, even if we're not talking about the allowance, we have the right to apply for holding over payments of provisional tax. So why do you need this provision every year? Chairman, in the current Inland Revenue Ordinance, there are a few scenarios in which the taxpayer can apply for holding over payment of salaries tax. First, he can enjoy new allowances. Number 2, in the coming year, his income will be lower than the income in the previous year. So in other words, his income will decrease by 10%. The third possibility is that some of his income sources have disappeared. So perhaps he has already retired, he's not employed. Or in the previous year, tax assessment is such that it's in the appeal or objection procedure. Then in that case, because deduction is not included, so he can apply for it.
So, using this new amount, $80,000, and if that is used, then he will be seeing a drop of his income by 10%, then that will be applicable. So we want the taxpayers to enjoy the right to apply for holding over of provisional tax as soon as possible. So that section is included. So can you do it this way? Say if the deductions in the coming year exceed a certain amount, then you can apply for holding over provisional tax. And then you don't have to include this section year after year for our examination. This is my suggestion. I think it's more efficient to do it that way. Can you really make it the deduction a statutory reason, so to speak, for holding over provisional tax? All right, please continue. Schedule 31, Section 4, that has to do with the dates. If for the above reason they are holding applying for holding over provisional paying provisional tax, then 28 days before the date by which the provisional tax is to be paid, and then 14 days after the date of the notice for payment of provisional salaries tax under Section 63C6. Please allow me some time to look through it. Mr. Chu, can you explain for 3 A, B, what is the difference between them? 3A, Chairman, that is 28 days before the date of the tax payment. In some cases, the notice for payment may be issued later. If the notice for payment is issued rather late, then we will apply 3B, and that is the application has to be made 14 days after the date of the notice for payment. Why is it the case that there will be a late issuing of the notice for payment? Now, actually, 3A covers most of the cases, and for 3B, it applies when the IRT receives rather late that the taxpayer's application that he will apply to hold over the provisional payment of provisional tax. So 3B is seldom invoked. If the IRD issues notices late yourself, shouldn't you be allowing them a similar period for the taxpayer to apply for holding over the payment of provisional tax? Why 14 days? In paying provisional tax, we hope to let the taxpayer know as soon as possible the taxable amount. And we don't want to wait until the last minute when we are assessing the payable tax. So there is a sense of urgency in this. Now, every year we have, say, we would just finish examining the IR amendment bill in June, and then after that we would be doing the final tax assessment. Yes, please continue. Now coming to Schedule 32, and that has to do with the one-off reduction for the year of assessment 2013-14. 1. Salaries tax 75%. Or $10,000, whichever is the lesser. In other words, the cap is $10,000. I have a question on the policy. What will be the amount foregone in total? Well, please allow me some time to check. Well, perhaps you can give us a figure later on. I just want to know about the salary tax. Are you talking about the revenue foregone? In our Legislative Council brief, we already mentioned that for the one-off reduction, including the salaries tax, tax under personal assessment and profits tax, the revenue foregone is $10.2 billion. Have you got further breakdowns. Salaries tax and tax under personal assessment is around 9.2 billion, and profits tax around $1 billion. Please continue, Mr. Chu. Schedule 32.2 is profits tax. One-off reduction, again 75%, and cap $10,000. That's subsection 1. Subsection 2, it says that where it's a business in the form of a partnership, the tax will be charged based on the profits of the entire partnership business. So it means that for the entire partnership, it's just $10,000. Is that right? Yes, correct. 3, tax under personal assessment. So people may have their tax, salary, and profits and all calculated under the item tax under personal assessment. Again, it's 75% and cap $10,000. Now, the amount for tax joint assessment of tax for a couple, then the amount of tax to be apportioned between the husband and wife is the amount as reduced under subsection 1. Is it the couple who has the right to apportion the share among themselves, or what? For married couples, the person and the spouse may have to jointly apply. And put simply, their income will be lumped together, and then they will come up with a total taxable amount. They still got 2 allowances, right? Yes. Well, they are calculated all together. For a couple, they just have 1 allowance, and this is $20,000. Well, no, it's just $10,000. Why just $10,000? Because in 3.1 we stated that clearly. I have to add 1 point, Chairman. In calculating the tax, the RD will calculate on behalf of the couple, and we'll see would they be charged a lesser amount through individual assessment or joint assessment. And we would do that, and we would give the best benefit to the couple so that they would not have to pay extra tax because they're not familiar with the regulation. Joint assessment of married couples, that's not implemented in many other overseas jurisdictions. Why are we still keeping it here in Hong Kong? Well, I know that in some overseas jurisdictions that mechanism has been abolished long ago. Why are we still keeping it? Some groups have questioned why you are sticking to that mechanism. What's your stance on this? Chairman, perhaps I'll tackle it from a technical point, because I might not be able to answer the question from the policy perspective. Now, on the technical side, for the salaries tax, there are also joint assessment and separate assessment. Now, for the tax under personal assessment, we also allow joint assessment and in separate assessment. But then the calculation will be very complicated. Well, what I meant is that we don't need the joint assessment anymore. I think that is the trend, because every taxpayer is in a separate, independent individual, and no matter whether you are married or not, you should be shouldering your own responsibility. And the international trend is that the individual should shoulder his own tax responsibility. So the individual should only should be used as the basis for calculating tax. Chairman, your observation is correct. Well, a long time ago, the tax is calculated based on the family as a unit. Well, in that case, there would be joint assessment for the married couples. Now, if the family was not used as a unit for calculating the tax, then there should be a separate assessment for the husband and the wife. Well, so it all depends on whether the tax system is a family-based or individual-based system. Now, what we're having here in Hong Kong seems to be a sort of transitional model where the individual taxpayers have a choice. Can I finish with my question first? Permanent Secretary, can you tackle that? Sorry, the mic is not coming through. Chairman, you might have your own observations on international trends on this. But undeniably, this arrangement gives benefits, really, the taxpayers much more. Are reforms needed? Should we advance with the times? I think we have to tread carefully, because taxpayers would feel that the existing benefits may be taken away. So we need more discussions on that in the community. Mr. Sin Chung Kai, I don't know whether the question should be taken by you or the Inland Revenue Department. Now, why is it that some other countries have abolished the joint assessment mechanism? I'm not suggesting that you should do it, but I just want to know why that was done in some other countries. As I explained before, if the tax system of a place was a family-based system, then there will be joint assessment for the husband and wife. Now, if the tax regime is rather an individual-based system, then there will be separate or individual assessment for the husband and wife. And we are providing both options to taxpayers in Hong Kong. So that's what we're doing now. Chairman, I'm sure that you're more familiar with tax systems in other countries. And the chairman said that the international trend is really switching from the family-based to an individual-based tax system. Do you have any figures on just ballpark figures on how many people have opted for joint assessment and how many are not on joint assessment? Do you have any information? I don't have the exact figures on hand, but my impression is that for every year we send out 2.5 million tax returns, and for those applying for joint assessment, around 250,000, including salary tax and tax under personal assessment, around 1/10, would you say? Well, that's more or less it. This is just a rough figure. Let me add, well, from the technical point of view, why do we want to keep the joint assessment system? Under Hong Kong's tax system, we have a very good tax allowance system. In some other jurisdictions, their allowance system is not as good as ours. We have allowances for parents, grandparents, disabled dependents, children, sister and brothers, and so on. So it's very family-based, and technically speaking, it's a rather good system. P.S. Anything to add from you? Mr. Sin, do you have any further questions? Mr. Chiu? I think I'm finished with the clause by clause.
There's a question I forgot to ask. Let me ask now. When was the last time you increased the dependent parents' allowance? Chairman, let me take this question. It's for the year 2012-2013. Last time under the salaries tax, all personal tax allowances were increased. Then what about children's allowance? Apart from this year, in the past 3 budgets, the child's allowance was increased. Chairman, my question is, it seems that you are very random. In 2012, there's increase across the board. This year, parents' allowance is increased, but not child's allowance. So is there any formula? No. You just threw the dice? Chairman, yes, I also feel puzzled. Is it true that these allowances take turns for you to increase them? I think there are different considerations. During the consultation period, we gathered some views. And we also refer to past adjustments, the economic conditions, the financial position of the government. And then if tax revenue decreases year after year, what is the impact on financial stability? All these considerations will be included. Mr. Sin Chung Kai, do you have any other questions? Secretary, just now we talked about joint assessment by couple. Can you offer some information on which jurisdictions have abolished this way of joint assessment and which still maintain this way of assessment? We understand that many concessions or deductions, allowances are based on families. In the future tax reform, perhaps we have to take these factors into consideration. So can you give us more information? Besides, to answer Mr. Sin's question, can you give a figure on the number of joint assessment cases? All right. Now we are done with clause-by-clause examination. If you read our information brief for 2014-15, on preparation of the budget, the FS had already extensively consulted LegCo members, chambers of commerce, and members of the general public. So, members, is it necessary to invite the public to give views to us on this bill? If not, then I will decide that there's not the need to invite members of the public to come. Secretary, I guess you can upload the information as a means to consult district councillors, right? As usual. I have checked the situation for the previous 2 years. Last year, there was the information uploaded, but not the year before last year. Okay, let's still upload the information. We don't need to conduct any public consultation session. There is not the need for a next meeting. We have actually fixed the date of the next meeting, but then I don't think there is any need for that. So, Mr. Chiu, can you please provide us with that paper? Thank you, members, and thank you, government officials. Yes, please go on. I am not involved in filibustering, but then strictly speaking, the budget has not been approved yet. And this bill entails a reduction in tax revenue. It is not directly related, but it is related to the budget. So do we have to wait till the budget is approved before the resumption of second reading debate of this bill? What is your plan? Thank you, Permanent Principal Assistant Secretary. Thank you, Chairman. Thank you, Mr. Sin, for your question. Now, LegCo has made some arrangements in relation to the appropriation bill, and it seems that the President expects that in early June, in meetings in early June, discussion and voting will be completed. Of course, depending on views of this committee, we think that the earliest time will be on the 18th of June. We will be able to resume second reading debate. On the 2nd of June, the House Committee will have to consider the Bills Committee's report. But of course, we respect members' views. All right, PAS, I heard that you would like to make a report to HC on the 6th of June, and on the 18th of June, you want to resume second reading debate. We will consider your suggestion. It depends on when Mr. Chiu can provide us with the paper. After that, I will ask the Secretariat to make arrangement and notify the administration. Mr. Sin, I think we have to wait till the approval of the appropriation bill before resumption of second reading debate of this bill. That is more reasonable. And I think that is also practically required. I think this will be at the end of the queue. Any other questions? Okay, then we can adjourn the meeting here. Thank you.